What's up, everybody? Joe Brown here. This is the Heresy Financial Show, and we recently got word that the United States and the other countries in the G7 have recently announced a new ban, more sanctions on Russia, this time on gold. And so in this video, we are going to answer the question of what impact this might have on gold, because some people are saying absolutely no impact whatsoever, but there is a chance that this could actually blow up and once and for all end the paper gold market that has been suppressing the gold price for decades. Ready? Let's dive in. First, a word from today's sponsor, iTrustCapital. If you've taken a look at markets recently, you've seen the stock market, whether it's small caps, large caps, tech stocks, anything, down a lot. Individual stocks down 80%. The index is down 20 to 30%. It is a bloodbath out there. Not only that, but you've found no protection in bonds because, let's be honest, it looks like the 40-year bond bull market is over as rates will probably go higher and higher and higher. And recently, the only asset class that has held up has been gold. Year to date, it is up 1 to 2% right now as we speak. And it is harder than ever to find a way to get your money in your retirement account into gold, because let's be honest, your pension, your 401k, they don't want to make it easy for you to get your money into gold. Typically, you only have the option to put it in stocks, mutual funds, maybe some ETFs. That's where today's sponsor, iTrustCapital, comes in. You put your money in iTrustCapital. It is a retirement account, so you can transfer your existing retirement account or portion of it, or you can open up a new one with them and make new contributions. And the beauty of this is they allow you to invest in physical gold, physical silver, as well as other cryptocurrencies. This is an alternative investments IRA. It is fast, it is cheap, it is easy, and if you sign up with my link in the description below, you'll get a sign-up bonus, $100 worth of Bitcoin assigned to your account that you can do whatever you want with. You can keep the Bitcoin, you can sell it, and use it to buy something else that they offer. Again, gold savings, real money, long-term, you maintain your purchasing power. And I use iTrustCapital to buy gold in my retirement account. You can do the same with my link in the description below. All right, so the United States has blocked gold imports from Russia. This comes in the latest round of sanctions, and they are joined by the other countries in the G7, including the United Kingdom, Canada, and Japan. Now, the reason why they are targeting Moscow's gold is because gold is Russia's largest export outside of energy, which means it's not a whole lot because they get most of what they need from energy, but it is the biggest after energy. Now, this ban applies to any gold that was mined in Russia, but it does not apply to any gold that was mined in Russia that was already located outside of the country by the time the sanctions were put in place. Despite these moves to stop the flow of wealth from entering into Russia by Russia being able to sell gold, many analysts are saying that this is a largely symbolic move. Why would that be? Why would that be largely symbolic when you block a country's ability to sell gold for money? Well, it's because part of this was already in place. Many countries had already stopped buying Russian gold because of the LBMA. The LBMA, which is the London Bullion Market Association, they already removed Russian gold refiners from its accredited list back in March. And if we take a look here, back in March, the price of gold was above 1900, and right now, as the time of this recording, it's sitting at about 1820. So the question is, again, why would this not have a positive impact? Because when you look at just the dynamics of supply and demand, you would anticipate that if you restrict the supply of something, assuming demand stays somewhat constant, you should see an upwards pressure on price, but that at least yet hasn't happened yet with gold. And that's because, as pointed out by Karsten Menke, who is an analyst at Julius Baer Group, this is due to the low relevance of supply when it comes to the formation of gold prices. This points out something about the reality of gold, because gold is not destroyed over time. It does not rust, it does not decay, it does not degrade, it just exists. That's why you can see when they find archaeological digs, when they find pots full of gold, you can find Roman coins from 2,000, 3,000, 4,000 years ago. That gold is still there. It hasn't rusted or decayed or gone away in any way. It still exists just as it it did back then. And so all of the gold that has ever been pulled out of the ground and refined, it still exists somewhere. And so the amount of new gold that is currently being pulled out of the ground is a very low percentage of the total gold supply. That means if you completely stopped all new gold production, it wouldn't really have that big of an impact on the total price of gold because all of the gold that's ever been created still exists. Most of the gold that is being bought and sold is gold that already exists, not the new supply. It's very different than something that's consumable, like let's say wheat. If you stop the production of wheat, well, wheat goes infinite overnight, right? Because you consume all the wheat that you produce. There's no long-term storage. It doesn't survive for years and decades. And so you consume everything that you produce in a very short amount of time. And so the prices are largely dependent on the new production, not on past production. It's the exact opposite with gold, that most of the prices are driven by the supply and the demand of people selling past produced gold, not newly produced gold. Now, with that being said, there is a chance, even though it's a small chance, there is a chance that this finally puts an end to the paper gold markets, that this actually does have an impact on the price of gold and ending the manipulation of the LBMA and COMEX on the price of gold by ending the paper markets once and for all. And to understand why, we have to take a look at what has happened with oil recently. The sanctions completely backfired, and instead of hurting Russia, the price of oil has gone up, and even with the sanctions that countries are trying to place, it has backfired on the countries that are placing them and not impacting Russia nearly as much as they were hoping. As pointed out in this article from ShiffGold, we see that the two largest consumers of gold, China and India, will likely continue to buy metal from Russia. Just as we've seen a hefty increase in the price of oil, we could also see some upward movement in the price of gold as supplies tighten due to Russia's sanctions. So while the G7 countries have said we will no longer be allowing anybody in our countries to buy gold that came out of Russia, the two largest buyers of gold from Russia are China and India, and they are not part of the G7, and they could care less because ultimately that leaves more available for them. And recently, India has been getting oil at bargain prices, at steep discounts, because they're one of the only ones still buying the oil from Russia, and so they're able to buy it for cheap. And so they love the fact that the rest of the world is saying, no, we're not going to buy it from Russia anymore. It could be the same thing with gold, that China and India get a little bit of a deal on it because they're the ones that are still buying it. In this tweet from Thorsten Pollier, who is an economist and author, he said that he thinks it will potentially blow up the paper gold market. This is because the COMEX relies on settling paper contracts. If everyone demands physical delivery and warrant transfer, the paper market defaults. And that is 100% true. The paper markets rely on dollar settlement. And so when you say, hey, I'm going to buy gold from you, instead of actually going through with the purchase of gold and giving them dollars and getting metal instead, you just close out the transaction at the end of it, and you get the dollar difference between what it was at when you started the transaction and what it was at the end of the transaction. You make up for that difference in dollars. But the key thing there is trust. And so when trust starts to disappear globally, you start to require the physical instead of the trust of the paper. And recently, geopolitically, there's been more uncertainty and more volatility, which means there's a growing demand for physical gold instead of relying on the trust with paper. And when you combine a growing demand for physical and even tighter supply now due to sanctions, you could put stress that the COMEX and LBMA cannot handle, and it could finally put an end to the paper gold market schemes. Now, obviously, this is far from a guarantee, and I expect that this move will have little impact on the price of gold. However, even with this happening and everything else that has happened in the world and the inflation and the crash in asset prices, gold has done its job. It has held up. In fact, gold is up about 2% year to date versus nearly every single other asset class has been crushed year to date. And so gold has been doing its job as a store of value, as it has for thousands of years throughout different cultures, different countries, different political environments. All throughout history, it has maintained its store of value, its purchasing power, and that has not changed even now. And I've got a deal for you today. We were looking at this article from ShiffGold. You can email my buddy Joel over there at ShiffGold, and if you tell him I sent you, Joe Brown at Heresy Financial, he will give you a great deal on large orders. So if you are looking to put in a large order on gold because of how well gold has performed recently and in anticipation of the future inflation, the future bailout from the Fed, and what gold may do in response, you want to stock up on some real money, some real savings, email my buddy Joel at ShiffGold.com. Again, that's Joel at ShiffGold.com. Got him linked in the description below. Let him know I sent you, Joe Brown at Heresy Financial, and he'll give you a great deal again on large orders. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.